Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, September the 12th, 2012. We'll be looking at Apple Incorporated today. Ticker symbol is AAPL. You can see it right here. We're looking at the 3-month chart. Obvious direction here is clearly to the upside. We've been seeing that for a while. Hit some resistance here that we actually broke out of, and let me draw that out right quick. You can see the breakout point here was about 610, 615 a share, 620. Basically, that consolidation period broke out, and we advanced up a little bit further, and then we consolidated again. This is what we've been seeing in the markets again and again and again, and that it doesn't surprise me to see that with individual companies. However, you're also starting to see breakouts of these individual companies as well as in the overall market averages. Ergo, you should be expecting the same thing to happen with Apple's stock, right? Right, okay. So now that we've seen consolidation, we're seeing an increase in volume today. You got a hammer candlestick formation. Obviously, I'm interested whenever I see a hammer candlestick formation, especially when it comes into a scenario where, let me clean that up, comes into a scenario where we're bouncing off the ultimate oscillator oversold line at 30, which is basically where you found your bounces before, here, here, and here. So all that catches my attention. You'll notice I've marked this one with a black arrow. Whenever I mark it with black, it means if the following day does X, then I will do that. I would actually buy. If it doesn't do that, then I wouldn't mess with the trade. Now here's the rule. The rule is today's high, which is 669.90. If we beat that by 1 penny tomorrow, I would buy that. That's how I would trade that. If, on the other hand, you don't do that, you just start to, you open up lower or something of that nature, and you start moving lower, then I would ignore the trade. But if we do get a move higher by even 1 penny, I'd initially buy it, set a stop 1 cent below today's low of 656. So I would set a stop 1 cent below that, and then look for this guy to break out. Now, this is an easy trade to the upside kind of thing for short-term traders. However, there's also potential here for swing traders to make more money. You'll notice this previous point here from this 610 to the 680 line here. That's roughly $70 a share, and this typically whenever you see a consolidation period after a major leg to the upside, it's indicative of the middle of the move. So someone could argue we could see another $10 per share to the upside in this particular stock in the short term, and that would make sense to me. I understand that. I wouldn't go out there and just buy, close my eyes, and walk away from the market and set a limit sell order at $10 higher. That would be kind of silly. Lots of things can happen between now and then, but I would not discount that argument that we could go another $10 a share higher in the short term on this particular stock. So now you know. If you've not been to our free website at PerfectStockAlert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in the next video coming right up. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.